Alright, welcome back. In this training video, we're going to talk about the Counterpunch Express trend mode. Okay, it's not a button you flip in the calculator, but it's another filter that we apply to our chart. Notice that we have a dark blue line on this chart, a new line. This is simply a 20 simple moving average. It's a simple moving average set to 20. So you would need to insert this. All trading platforms come with moving averages. You put a 20 simple moving average on your chart. I like to make it dark blue and a little thicker. And the only thing we're using this for is to give us a greater sense of direction. All right, we already know that when we're below the momentum line, we want to go short. And when we're above the momentum line, we want to go long. However, this will help eliminate a lot of choppy situations and will help confirm that we are trading in the direction of the trend. So when the simple moving average is moving down, we only take short trades. So let's just look at from left to right. This is a pound US 5-minute chart. Notice you have a setup here to go short. You're in the chop zone, but you're below the 50. You could take that short. You're even in the squeeze zone because the 50 is pushing down towards the 200. That would eliminate a long trade, so you could still take a short. Notice that the 20 simple moving average, the SMA, is also moving down. In trend mode, you're allowed to take that trade because it's in the direction of the 20 simple moving average. Notice that you have a long trade here. You have a long setup here. But because the moving average is moving down, the 20 SMA, you don't take this trade, you don't take that trade, you filter them out and you stay short. Makes for a really great move. It ultimately works its way down, almost hitting a big target, just barely missing on that bar. Pretty darn close. Notice there's another setup here. Maybe that's the setup you take. You're in agreement with the SMA, so you could take that short. You can take this short. But notice something interesting here. Sometimes you have to look at the reading on the data window very carefully. Because if you look at the bar before this, the reading is at 42. You see that? The next bar, and this is after the bar closes, the reading's at 43. So you have to be careful because here's a case where the SMA is moving higher, even though it's only for one bar and it's just a fraction. A fraction of a fraction, a very small amount. Look what happens on the next bar. On the next bar, it moves back down again. And so now you could take that trade because it's moving down. So on one bar, you had to stand down and not take the trade because it was moving up. However, it never came down and hit the entry anyway. But on the next bar, it became valid when it started moving down again. And then that one triggers in. And you can see it comes down for a really nice trade as well. And that's how trend mode works. Let's look at a few more examples. Here's one of our tried and true trade plans. It's the Dowie Mini. It's a 377 tick chart. And this is a trade plan that we use trend mode. And you'll see us trading this in the trade room. We start this at 8:30 Central Standard Time. That's when the U.S. markets open, since it's traded out of Chicago. Just as a side note, we always set our charts to exchange time. And the reason we do that is because there are exchanges in different time zones. This is traded out of the CBOT, Chicago Board of Trade. It's in Chicago, so we want to set this to Central Standard Time. We also have traders all over the world in different time zones. So it's easy to be confused if everyone has their chart set to their local time. It would be hard to kind of reference a trade where everyone could really easily distinguish what trade we're talking about. So we always set our charts to exchange time so that we can all be on the same page. All right? So if this were the Russell, we'd be starting at 9:30. But because it's the Dowie Mini, we can start at 8:30. 8:30 Central Time. Okay, so it's really simple. We just apply the trend mode rule. When the simple moving average is up, we can take a long trade. And that happens on the open of our session. And it quickly comes down. It almost hits target 1, just barely misses, but not far enough for us to take any action. The entry is at 36, target 1 is at 51, and the price comes up to 48. It misses the target by 3 ticks. It's still pretty close. If it came up and hit 50 and missed it by 1 tick on the major key level, I would have moved my stop up around the signal line to cut my risk on the trade. But it didn't. It missed it by 3 ticks. So there's nothing we can do. We just try to stay with it. It could come down. It could work its way back up. Not the case here. This ends up being a losing trade. So now we're looking for a second trade. And notice that the trend is turned down. Another thing I want to point out to you is quite often when you get a false breakout in one direction, it could set up a really nice move in the opposite direction. Okay, so we see that it tried to put a bottom in place here. You have a higher low, right? You have a low, a higher low. It's even making higher lows because you have the exhaustion dots moving up. You get a setup to go long. The 50 EMA was pushing down trying to meet the 200, and remember when I said this is a test zone? Well, it tested. The price tried to get higher here and failed, and it pushed lower, and the 50 EMA consequently resumed its trek to get back down to the 200. And this set up a really great move to go short. Now, why didn't we get a counterpunch set up here? Because it's higher than this group of dots. It's higher than the second group of dots over, and yet we don't get a counterpunch trade to go short, which is unfortunate in this case. The reason why is because remember what I said with a counterpunch trade to go short, the histogram, the high trend, has to get up into the blue before it turns. And it didn't have enough strength to get up into the blue. It turned before it can get there. Sometimes we're going to miss a really good trade because of this rule, but this is a filter if you think about it. A lot of times we're going to avoid a lot of chop and a lot of false signals. So it's just a trade. You can learn how to trade this. You can certainly learn how to measure the high to the low and get your entry 2 ticks below the setup bar and project your targets down. You can learn how to do that, or you can just wait for the next setup. Also, you're in trend mode. And so even if you wanted to do that, the trend is up here. The blue line's going up. When it finally does move down, it would have been way below the entry anyway. It does come up, but it doesn't get close enough to the entry. So it would have been a missed opportunity trading this market the way we do in trend mode anyway. But you never need to worry because the bus always comes around. There's always going to be another setup. So as this pushes lower, you finally get a setup down here. And it's clearly trending down. And look at how the 50 is pushing hard towards the 200, just getting ready to cross over. But also you're in trend mode. That's your next setup if it triggers in. So you place your trade. It does trigger in. Uh-oh, what happens here? You have a setup to go long, a counterpunch trade. Are you going to stop and reverse here? If you were in standard mode, I'd say, well, you kind of have to. Although you may want to adjust it up around this little swing level, right? You might want to push it up to here. However, because you're in trend mode, you ignore the long trade because you don't take long trades when your simple moving average is down. As it so happens, this trade does come up and stop out. But notice the idea is good because it ultimately works down again. Here are your 3 dots sitting on the 50 EMA. That should clue you in. You have another short trade. You have to be careful that the line is down. Went from 0.9 to 10. Then it pushed through. So in trend mode, you might have missed that trade. Keep going. Finally, you get this long trade here. Obviously, you have a long trade here, but you can't take it because it's down. It's still down here. The entry is at 16,120. We'll push it off the key level to 121. Look how this works. You have to look at the reading. It's at 104 even. The next bar over, it's at 103.6. The next bar over, it's going up again, 104.4, but the price is up here. But notice that it pushes down and gives you a chance to get in right here at 21. And when it does, the SMA is up. So you can get in sync with this trade. Even though it triggered in, you can still take it when it pushes down to target 1. When it pushes down to the entry at 21. And then you take it and you ride it up for a winner. You see? So when you're dealing with trend mode, it requires patience. You could get a losing trade. You might, in this case, since it is just splitting hairs and you've got the 3 dots on the 50 EMA indicating a strong move lower, you might take that trade anyway, right? Even though you're in trend mode and it did go up a tiny bit, the trend is down. You are on the 50 with the dots, and we know that that gives you a high percentage move lower. So maybe you override trend mode in this one situation, and that would have been a good decision. There is the art to trading, of course, but even if you didn't, even if you eliminated that trade, you just stay with your plan. In the end, it's going to work out for you. Not every trade's going to win, not every session's going to win, but this strategy is winning 80 to 85% of its sessions, this trade plan. So it's just about being patient and sticking with your trade plan. The better you get at the counterpunch, the more you're going to be able to make this your own and find your style. These are very powerful setups. The lines give us a lot of information. The only thing you're missing now is experience, and the only thing that can give you experience is just doing it and practicing and observing and learning and repetition. But trend mode is a very interesting way to trade, and we use it with the Dow Mini, we use it with DAX, and we use it with a lot of futures, and you can use it with stocks. There's a lot of markets that you could try trend mode. In the end, I'm of the opinion that both methods work well on most charts. They just work differently. So a lot of it has to do with personal style. Trend mode will certainly give you fewer trades because the setups are pickier and you're just waiting for the stars to be in alignment, and we've added one more star, the 20 SMA. Now we're going to look at some more examples, but I want to also talk to you about a principle that we call get in sync. Getting in sync with a trade is a unique principle, and we do it all the time. There are different ways to get in sync. What it simply means, and I'll go back to this example here, is when a trade triggers in and we can't take the trade, perhaps it's because our filter tells us no, whatever that filter is, whether it's a chop filter, whether it's this trend mode filter. Perhaps this trade triggers in before our start time, okay? And then it becomes our start time. So can we take the trade once our start time starts? If we're getting in sync? Well, yeah, we can, but there are a few rules you have to understand. Let's talk about those. Before a trade triggers in, that's just a setup. And we know that if the bar closes on the other side of the signal line 2 times, it cancels the setup. Maybe it's 3 times, depending on the trade plan. We also know if there's a new setup that comes, we would then cancel the older setup and focus on the new setup. But if a trade triggered in, it changes everything. We can't cancel a trade that's triggered in. Okay, just imagine calling your broker and saying, oh no, I changed my mind, cancel. It's too late, you're in the trade. You can exit the trade and either profit or lose depending on where the price is, but you can't cancel it. It's too late, it's already left the station. So if we're trying to get in sync, let me just make this bigger and let's examine this example. In this case, it's a trade that triggered in against our trend mode filter. But let's say it triggered in before our start time. Or let's say it triggered in during a news event when we're just standing down and not trading. And then a few minutes pass and now we could start trading again. There's different ways to get in sync. If it's triggered in, you can get in sync with the trade, as in this case, the price comes down back to the entry. There are two things that might happen that would cancel getting in sync with the trade. One is if it comes up and hits a money management level. Target 1, one tick in front of target 1, if that's where you're cutting risk. A money management level. When it hits a money management level, you do not get in sync. You cancel it. Or if it were to come down and stop out, that trade's over. You no longer get in sync with it. Okay, so the cancel rules on a get in sync situation are not the same as the cancel rules of a trade that has not yet triggered in. Okay? Another thing is, let's say that this is the trade we're interested in. Maybe we're in standard mode, okay, and our start time is on this bar. Or our start time is actually down here on this bar, and this trade triggered in. If we get a new setup prior to hitting the entry, we cancel that one and we go with the new one. That wouldn't have been the case here because it would have triggered in and hit the entry before this setup. But there are times when you're trying to get in sync with the setup and then you get a new setup, and that entry, new setup in the same direction I should say, we go with the new trade. Okay, it's just a simple rule. It's how we get in sync. And I realize I'm giving you a lot of information really fast here. Maybe you listen to this a few times, write down some notes, but you'll see it over and over again with repetition in the trade room and as we continue to look at examples. All right, let's look at another example. This is the DAX. This is a trade plan using a 233 tick chart. DAX futures, very profitable, but you need to have extra capital to trade this, but you can build up to this market. It's extremely profitable and it's been very successful for a long time. And we use trend mode. It starts at 9 a.m. Eurex time. Okay, so you have to check your time zones, but Eurex traded out of Germany. So 9 a.m. is when we start looking for trades. Notice that here we are at 9:05. The trend is up, so we're not going to take a short trade. We have the possibility to go long here. Never triggers in, and instead it comes down again. And it gives us another short trade, and that one does trigger in. However, since we're in trend mode, we can't take it because the SMA is moving higher. Something subtle happens. The price comes back up and it hits the entry, and it does so when the moving average moved lower. And you could tell by looking at the numbers that it moved lower. Right here it's at 49.8. The next bar it is at 49.2, and then it comes up and hits the entry. Doesn't matter where it's at after this bar closed, you can get in sync and get short on that trade. This trade's going to fail. Instead, you end up with a stop and reverse on the purple trade. So you have to read your numbers again. It's at 49.3, and then it moves down to 49. So it's moved down. Now, you could round it. You could say it's at 49, and it's still at 49. You could ignore the decimal. It depends on how nitpicky you want to get. And when you learn how to backtest, you're going to have to make a decision. But to keep it simple for now, if it moves down, you can't go long. On the next bar, it moves up again. But the price is up here. Now remember, when you take a stop and reverse, you're going to put that up a couple ticks. to protect the short trade, but to respect that the market might turn and go the other direction. So instead of the entry being at 93.50.5, you might put your entry in at 93.51.5, 2 ticks higher. And with the DAX, I make a 2-point adjustment, not a 2-tick adjustment. It's just one of the details of the trade plan. So I would push that entry to 93.52.5. So I really want to protect my short trade. And I also want to respect if the price pushes up. And so it did. It did push up through 93.52.5. But it was when the SMA was moving down. Once this bar closed, the SMA is moving up again. So on the next bar, it pushes down and it hits the entry. So you can get triggered into that trade because when it closed on this bar, it was moving up. And so when it comes down and hits your entry, that's where you get long. And it goes up to a nice winner. You see? You have to pay attention. It was a perfect trade. It hit that right on the nail. On this bar, kept going too. The point is that the stop on this trade was way up here. And you're able to get out of this trade and get long and only lose a fraction, less than half, of the full risk. And that's how you skew the odds in your favor. You cut your losses and get on board the winning trade. And we're doing it with the rules of our approach, in this case using trend mode. It does add another level of complexity. If you're going to use trend mode, is one more thing that you have to pay attention to. But you learn how to do this. Just like riding a bike. After you've done it enough times, it just becomes automatic. It ends up being a very successful trade and a successful session. And we're able to quit positive and move the equity curve up, move our account forward, and we're done with the session. If you're using trend mode, it's a more patient way of using the Counterpunch Express, but it's very good. On the Euro-US 5-minute chart coming into the European session, which typically starts at 2 a.m. Eastern Standard Time, but you can find an argument to maybe start at 1:30. If you look at a lot of charts and do your back testing, you're going to learn that a lot of the trades that start 30 minutes early are good trades. But in this case, the trend is down and you avoid a long trade. It does move up again, but it moves back down before it actually triggers in. And instead, you're able to get the short trade. And that's going to work its way down to a nice target. Comes up, there is a long trade. The trend is down, so you can't take it. By the time it moves up, it's already left the station, and you miss a nice move, which hit the target perfectly. It is true that trend mode will eliminate some winning trades. That's going to happen. But it also eliminates losing trades. It gives you fewer trades. You just have to be patient. A good trade is going to come around and it's going to work out more times than not. Some of you may prefer to trade slower charts. Here's a 15-minute chart. Usually with a 15-minute chart, you might get 1 or 2 good trades during a session. 1 or 2 good trades during the European session, 1 or 2 good trades during the US session. But trend mode works very well. Here it's up, triggers in, price moves up. Here it's still up, it comes down, and then it moves down. Maybe you're going to miss this trade unless you want to utilize a concept that I call a chase entry. And that's just where you adjust the entry down a little bit. And then if it comes up, you can take the trade a little bit below the entry. Okay, that's an advanced principle. The more you see this, the more you might want to consider it. But this is clearly a case where it would have worked out great. But if you miss that trade, your next trade might be this one or this one. And notice how they work their way down to nice targets. You just have to be patient. That's the whole point. Let the stars line up. There will be some missed trades, but there's going to be a lot of great trades that you're going to succeed with as well. Alright, so I pretty much copy and pasted the DAX chart, changed the symbol to Apple, made it a daily chart, and you can just see how well it works in trend mode. One thing about trend mode is you can quickly see how well it works. In fact, even standard mode. But I like looking at stocks in trend mode because it eliminates a lot of the noise. Apple usually goes up. Well, here's a case where it's going down. You have a possible long here, possible long here. You're avoiding those. In fact, the trades that are being taken are the short trades. Triggers in here, trend is down, stop is up here, it holds, and it comes down and hits targets. How about this one? Same thing. Triggers in. Yeah, the big sell-off in the market not too long ago. Counterpunch preempted that, and we're trading with the trend. You're avoiding a long trade here. You're avoiding a long trade here. There's a short trade, doesn't trigger in, and you just don't have any additional setups. Could you get in sync with the white trade back here when it turns up? You can't, because there was already a newer long trade. And remember, when you have a newer long trade, it's going to cancel the older long trade when you're trying to get in sync. And that one already went too far too fast anyway. If it hits a money management level, you don't get in sync with it. You see how it works together with the rules? And so basically you're just flat and waiting. We'll look at some more stock examples on another video, and we'll talk about some really great ways to trade stock charts with the counterpunch. Hopefully by now you've learned a lot about the strategy. There are unique ways to use it. I'm sure there are other indicators you can team up that would also be effective. At some point you will be able to make this your own. You will take ownership of it and you will master it, and you'll be able to use these tools. You stay with the spirit of the strategy, but you also fit within your own personal style of trading. This strategy is capable of many forms, many ways of using it for success. The important thing is to learn it the way I'm teaching it to you first. Give yourself the opportunity to gain experience with it, to learn with it, and little by little you'll get better at it. That's just common sense. And you want to give yourself the chance to get better at this. This strategy is a remarkable strategy, and it's going to give you amazing setups. It's just a matter of learning how to use them. I realize there's a lot to it, but if you strip it down to its simplest form, you'll find tremendous success.